Hey guys, Boris. Welcome to the majors review of technicals for SEP 12 through SEP 16 of Euro dollar, dollar yen, and pound dollar. Well, very interesting week this week. Last week we warned you about the trap, about don't fall for the trap. That is, the idea was that if you sold the euro, be very, very careful that it wasn't going to turn around on you very fast. And indeed, that's exactly what happened. The euro just completely flipped up and then flipped down the other way. I mean, one of the more fascinating and ironic things of trading is that you never know how things are going to play themselves out on a fundamental field. Who would have thought that a hawkish Mario Draghi would ultimately trigger a dollar rally because the market sort of saw his reluctance to go negative as a view that central bankers are basically giving up on negative rates and ZERP and are trying to normalize policy, and therefore the Fed was going to likely hike rates. I mean, that's a very, very, very steep leap of imagination, and yet that's exactly what happened on Thursday, and we had the dollar flip around completely and took out a lot of key levels, which is why we were looking on the technical side of it, and we're much better prepared sort of for a lot of this movement because we knew that that if key levels weren't going to be taken out, then certainly the possibility of a flip to the other side was right then and there. Next week, the calendar is actually sort of in a mildly quiet mode because everything really happens the week following. Everything happens not next week, but the week after this, when we have the BOJ and the Fed meetings and the rubber hits the road, both. Whether do we have any policy objectives from the BOJ, or do we going to have a possibility, still a very slim one, I think, at this point, of a rate hike from the Fed. But in either way, the market right now trading with a slight dollar bias. U.S. yields are rising. That's helping dollar yen, and that's sort of how we're going into this week as far as trading goes. Not much on the calendar, as I said. Really, the major event this week is going to be U.S. retail sales on Thursday. That could give us at least a near-term view of the state of the U.S. consumer. And if the U.S. consumer is really doing poorly, in other words, if retail sales go negative, it almost becomes impossible to see how the Fed could justify a rate hike with a slowdown in ISMs, slowdown in employment, and now a U.S. consumer not spending money. They really would have to be forcing the issue in September. So I think there's a lot more obstacles than the market thinks, but right now the market is dollar bid, trying to push U.S. yields higher, and that's helping the U.S. dollar go higher. And then, of course, flipped around a lot of the major pairs this week. But and we'll take a look at the charts here because in many ways, what's fascinating about it on the technical side of it is just it all depends on how you look at it. It really is in the eye of the beholder of whether this is a bullish or a bearish move for both the dollar and the counter dollar trades. But let's just take a look at the levels now first and foremost and see how the levels shape up for next week. Resistance, very key resistance at this 1350 level. This is a big, big move. If we bust out beyond that next week, and we're pretty far away from it right now, we're trading like 112. If we bust out beyond that, I think that's really puts it into unambiguously bullish euros or unambiguously bearish dollars. Similarly, in dollar yen, this 104 to the top side is a very, very key tell of how bullish the dollar is. We need to take out the 104s in dollar yen to the top side to really convince us that this is a longer-term dollar bull rally. And cable actually is the least interesting of all. It's compressed into a relatively tight zone of 34 to 32. It's having a very, very hard time trying to penetrate that 135 level, which is the multi-year breakdown level post-Brexit. The news on UK so far is relatively mixed. We do have UK labor data coming up this week. We have, of course, also the Bank of England meeting. They're not likely to do anything different on this particular meeting. I think they've sort of said their piece last time and are pretty much going to watch the economy as it goes. What's still a huge unknown on the UK side is exactly what's going to happen on the Brexit side. It seems like the government really wants to proceed with a Brexit declaration, and that is a unwinding out of the EU. But they want to sort of get all the best of the EU while giving up the worst. That is, they want all the trade privileges without having any of the citizenship privileges. So I think it's going to be a much tougher road for them to hew. Right now, we've had a big recovery in UK business sentiment that's really helped the pound, but we still are standing underneath that 135 level, and that tells me that the market is reserving its judgment as to whether this is really a situation that's been resolved or just simply a temporary pause, and we could potentially be a much bigger, massive sell-off as we go forward. So let's take a look at the charts here. Let's see where everything sets up. Starting with the euro. So the euro was actually good. This is what I mean about it's really in the eye of the beholder. If you look on a longer term chart here on the euro, there's no doubt still in a downward trend. We still have a failure of lower highs, and as a matter of fact, we've had a failure of lower high just on Thursday with this fake out of the ECB move, where we failed just in front of that 1350 level. But this 1350 level is very key. It's a big resistance level that's been around there for a while. And as you can imagine, if we kind of bust out through here, really the next big resist level is nowhere near except the 1600. It's really sort of a top of the range, very strong move. Not only that, if we sort of bust out beyond that, when you look at it from the other side of the equation, over the last 3 or 4 months, you've been doing nothing but building an actually stealth uptrend, a series of higher lows and a series of higher highs, where you're peaking yourself up here, which is why this level here is just so crucial. We failed in front of it this week. If we start turning back down, and this is where it gets interesting, we start testing the 1150 to the downside and break below there, and sort of really go all the way out to 1050. It really becomes much more of a range trade, and euro loses a huge part of its upside momentum. You could even make a case at that point as a sort of a head and shoulders formation, ready to come down all the way to test the lower end of the range. It becomes a much more pro-dollar trade. On the other hand, if we kind of just hold around these levels, begin to rebuild and can take out the 1350, it's a very euro positive, dollar negative move. So we may not be able to do either one of these things. We may just have a very tight range around this 1250 level for most of the week as the market just simply waits to figure out what happens with a Fed. But in the meantime, these are the levels we really need to keep our eyes on and not hold any judgment one way or the other. We talked about last week how important it was not to get too swayed by this 1150 level and how important it was not to get suckered into a false move, where I said, if it came down and came back up above the 1250 level, you needed to get out, and that was probably the right trade. You certainly want to reserve your judgment right now because the picture technically is very unclear on both sides. Now, similarly, of course, it's the same kind of a story on dollar yen on a longer term basis. Yes, a series of lower highs, a big failure, downtrend, but actually what you see here is finally stabilization around the parity level since July, and more importantly, on the more recent slice of data, you certainly see a higher low here forming. Now that's why this 104 level is so critical. A break above here really puts us on this path towards this 105, a much stronger, much deeper, much more robust bottom here that could suggest we could have 107 in view over the next month or so. So yen is at a critical juncture here. A breakdown below the 101s really bodes badly for it. It could still, it could certainly do a triple bottom here underneath parity, but it really loses a lot of its upside momentum, and it still pretty much confirms the downside trend. I tend to think they're going to be the more likely scenario here. I don't think we have enough fundamental push here to push us through this 104 level, but of course my eyes are open. And certainly, a break above the 103, 103.50 is going to put us into play. So next week, I think the front of the week is going to be very critical in terms of where the yen trades. Did we run out of juice here as we come to the end of the week, or do we have more to go here? Watching the 103.50 level is going to be very important. But for now, it really appears to me like the yen is more of a sell than is a buy. And last but not least, we're looking at the pound, and the pound, I think. You want to talk about sort of the power of the major support trend lines. This is the 35 line, right? And this was a multi-decade level low that Brexit broke. And now, in classic technical analysis form, that which was former support becomes current resistance. And you can see how it just simply bumps its head against this top. As a matter of fact, I should have been more aggressive with you guys last week. I should have simply said to you, if we get anywhere close to 35s, it still looks to be much more of a sell than a buy. Now we're sort of drifting back towards the middle of the range. This 130 becomes the support level. That's a very key support level. On a shorter term segment, you see this sort of post-Brexit, modestly bullish UK pound thesis is all happening. Higher lows, buying the dips. That can all happen. But I think the interesting thing here is how this week's data comes in. We have the labor data coming out. We have the BOE making commentary. The key question is the market sort of already, priced in the post-Brexit rebound, and now is actually starting to price in the post-Brexit hangover, which is sure to come. Hard to say, but I think at this point, if we start breaking towards the 32s, it's much more likely that we're going to be coming down to the 130s. Like, if we can't hold in front of the 32s, a lot of the upside momentum in cable has been lost last week ahead of 35s, and it looks like we're going to need to rebuild and find our support back to 30s. So 30 should be sort of a downside target for the shorts. For us to get very, very bullish, we really need to come back, and we really need to come back the other way and actually break the 135. At this point, you sort of can just sell ahead of 135 until it stops working, because that seems to be a pretty serious roof over its head, and very unlikely that there's anything fundamental that's going to really break us to the upside that hard, that fast in the near term. So that's how the week shapes up. Basically, the key levels to observe here, of course, 11.50 to the downside on the euro, 13.50 to the upside. On the yen, it's 101.50 to the downside, and very much this 104 to the top side. And with the pound, it's, if we ever get anywhere close to 35s this week, you just sell with your eyes closed. 34, 35, you just sort of sell with your eyes closed and hope it doesn't break. On the other hand, the downside momentum certainly signals that you could possibly sell market here with a stop ahead of 35s and see if we dribble all the way down to 30 as the world kind of loses its love affair with a post-Brexit pound. So that's how the week shapes up. I wish you guys the best of luck, the best of trading. Boris, over and out.